Brad Stafford here. Video lesson part 1, developing a premium portfolio. Part 1 is diversification. Diversification basically falls into two specific categories. Diversification through markets and diversification through sectors. Now part 3 is actually going to be finding the markets, finding the sectors that you can diversify into. But what I'd like to first look at is diversifying the markets that you're in. When we speak of diversifying markets, we actually speak of getting into non-correlating markets such as futures, forex, bonds, stocks, for example. The portfolio that I've put together for you down here is a good example of this. It covers a number of different markets. Freddie Mac stock goes into a pro share. I have a future here. I have a forex pair, some more pro shares, stock. The key with this is to get into a number of different markets. Stocks, futures, forex, bonds are really the best way to get into them. But a lot of this comes back to the problem where, for example, I only have a stock account. I only have a futures account. I only have a forex account. That's okay. Basically, that comes into our second point, which is actually going to be the sectors. When I speak of sectors, I speak of specific sectors within stocks, for example. Let's say we're looking at Bear Stearns Company. This would be considered a financial company that would fall into diversifying in a non-correlating market. Might be Ford. So what I'm going to do is actually just do a search for Ford, bring up the chart analysis. It's going to bring up all of the matches, and I'm looking for Ford Motor Company. Here it is at the top. And so as Ford Motor Company really has not much to do with the financial sector, it might be a symbol that I want to add to my portfolio. Now let's look at my portfolio and see where else I can diversify within sectors. I'm going to scroll down here. And let's look at crude oil, for example. Crude oil is obviously in the energy futures section. So what direction I may want to go with that has nothing to do with the energy sector. I may actually want to look at soybeans, for example. Some may consider corn to be an energy. Some may consider corn to be more of a consumable. So let's actually look at soybean oil. So we have crude oil here. I'm going to do a search for soybean oil, and I'm looking for the future, and then I have the Chicago Board of Trade, and then let's go with the March contract, and let me just add the March contract to my portfolio. So already I'm diversifying within my portfolio. But what it really boils down to is diversifying within the sectors that you're in so that markets aren't competing with each other. For example, if I had Ford, I wouldn't want to buy Firestone if Firestone has a contract with Ford to produce their tires, because if Ford starts heading downward, then Firestone is going to start heading downward as well, because one of their biggest contracts is failing. So that's the one thing you want to take a look at. Now, the ways that you can really find the symbols to help you diversify are right here in our Smart Scan tool within Market Club, and I'm just going to do a quick example. After the video, I'm going to redirect you to a page where you can learn a little more about it and exactly how to diversify. The best way to use the Smart Scan tool is to read a little more into each one of these filters and then determine from there what markets you might want to trade. But it's really about the research, knowing what companies you're interested in, knowing what markets you're interested in, and then really diversifying from there. Diversity, again, is the key. Diversification is the key. What I like to do is redirect you to our educational page where you can learn a little bit more about our Smart Scan technology, and I encourage you, come back next week as I'm going to be discussing confidence in symbols, developing a premium portfolio. This is Brad Stafford from MarketClub.com. Take care.